Good morning. We are back for, hold on a second. Yep, microphone's working. We're good to go. Back for another day of trading. You're watching the Trading Phoenix, where I trade live every morning in my trading account, my challenge account through Funder Pro. I document my entire journey from nothing to trying to become funded, profitable, and then a full-time day trader. I do this live every morning, no gimmicks, complete openness, nothing but honesty, where I sit here and trade and blab about what's going on in my head as I watch the charts. And I do this to have something out there in the YouTube world that shows the entire process, not just the good stuff, not just the bad stuff, but all of the in between, which I believe is actually a little bit more important than the good and the bad in learning how to become a day trader. So, with that being said, welcome to the channel. Thank you all to my subscribers. I appreciate every single one of you. We are at 195 subscribers currently. And that for me, in less than 4 months, is a wow. So thank you so much. If you're new here, thank you for joining us. Hit that subscribe button for me. Like, comment, share, all those things. And I hope you enjoy the content. I will be bringing more content to you guys, not just the lives. Now that we're growing and continuing to grow, I will continue to bring you guys more content. And anything that you guys want to see that I'm not doing, feel free to leave a comment. Let me know your suggestions, and I will read every single one of them and try to do what I can to bring you guys what you are looking for. So, we got about 30 seconds here until market open, New York session. We are so far continuing to the downside here. Let's take a look at the day chart again. As you can see here, we've broken past that 19.5 mark, which is where I said we were headed yesterday. We 100% hit that and went a little further. This morning we opened up below that 19.5. So it looks like our downside may continue a little bit. We'll have to see what market open brings us here. We did push down in previous sessions today, but we did push back to basically where we opened. So we're kind of sitting right now at where we opened for the day in previous sessions. So we'll see where we go. All right, here's market open. We are expecting some data today at 10 a.m. That data is JOLTS, job openings, important piece of data, has a high impact on the market. So just look out for that. That happens in 30 minutes. Okay. Let's just take a quick peek at what volatility is. Hasn't updated. Oh, there we go. Oh, yeah. Wow. We're even higher than where we were yesterday, which is insane. But it's to be expected. And I mentioned that last week that we were going to, most likely be an extreme volatile market this week. I mentioned it on Sunday when I did my Sunday night market preview for the week. So we talked about it yesterday in the live that you couldn't hear me in because I forgot to turn my microphone on. But it's to be expected. We got all kinds of data coming out this week. It's all kinds of uncertainty in the market right now, all kinds of uncertainty in the economy in general. So we're going to have extreme volatility. And in a little bit, I'm actually going to bring up the Federal Reserve's chart for the VIX, for the volatility index. And we are starting to peak. There's a little article that came out this morning about how this may be a time to look to buy stocks because the last time we were at these levels, the volatility index basically tanked and stocks moved up. I don't know that that's going to happen this time. And I would be very, very cautious of this. It's just an interesting article, uh, and it's an interesting chart that we'll take a look at in a few minutes. First, we're just going to let uh, market open here play out a little bit, and then we will see what is happening. Let's just take a quick look here at, yeah, see, so we're basically sitting at where we opened today, previous session. We're slightly higher than what we opened. So we had a push down. Um, I believe this is the Asian session. I'm not 100% sure about all that, but I believe that that's what this is. And then we had a nice climb, some consolidation, a little more bump up above this 19.5 support that I was aiming for yesterday, um, which we hit, as you can see. And we consolidated a little bit above this support, or what is resistance now, and took a pretty decent move back below that, and pushed down a little bit. So my opinion, we probably have a little bit more downside today. We'll see. I think the JOLTS number is going to have a lot to do with where we go. Um, Keep in mind now that this 19.5 area here is a resistance now. Okay. Uh, Took a nice trade yesterday, aiming for this 19.5 area. Um, I actually moved my take profit to a little bit above that, but we hit, and I felt very, very strongly that we were going to reach this 19.5 based on what I was seeing yesterday, and that's exactly what happened, and then some. So I think we just have way too much uncertainty in the market, and in the economy for there to be any kind of decent move to the upside. If we get an upside move, I would just wait for it to play out and then take that short at this point in time. Not financial advice. Don't listen to me. That's just my opinion. Okay. And I know nothing. So I know nothing, Jon Snow. We are looking like we're getting a little bit of support here, but like I said, very volatile um, market right now, and it just is what it is. To be quite honest with you, I'm probably not going to get into anything until after we get those JOLTS numbers. For some reason, so in my account that my challenge account here through Funder Pro, they do limit news. You can't be in trades during specific news and data points that are released. Most of them are high impact. Jolts, for whatever reason, isn't one that they limit. So I can be in a trade for this, but it still is a high impact data point for the market. So personally, I'm not going to be in it in a trade during those numbers because, especially with this extreme volatility now, where we are actually at peak levels for the VIX. So, uh, at any point in time, we could actually, fall. But to be honest with you, I think we are going to be at this peak level for this entire week because today you have JOLTS, tomorrow you have CPI data, Thursday you have PPI data, and then Friday you have Michigan sentiment, consumer sentiment. All of that is high impact. All of that is data that the economy, the Fed, the market, everybody's waiting for that data. So, are we going to get any huge moves in the market before we get all that data? No, I don't think so. And if we do, it's going to be to the downside. Again, my opinion. Getting a nice little push up here. Again, I'll be waiting for the data to come out. All right, and that's really about it for data today. Is jolts. Really isn't much else. Mhm. Tomorrow's big CPI data. CPI and PPI data tomorrow and Thursday all come out at 8:30 a.m., which is actually nice. I'd prefer that these big hitter data points come out before market open. I like that because then I don't have to wait. Once market opens, it already knows what it wants to do. So you can catch the train. But when you have data that comes out at 10 a.m., which does happen often, you just get volatility until that time. So it's best to stay out unless you're scalping. Good for you. Get your scalps and get out. Okay. Let's take a look at the heat map here. It's kind of 50-50. Yeah. All right. Let's do some technical analysis here while we're waiting. We've had a very, very steep decline in the NASDAQ here, which pushed through a 2-year strong trend line and also the 200-day moving average, which has been respected for the last 2 years as well. 3 years. 3 years. Since 2022. What year are we in? 25. Yeah, 3 years. Um, yeah, so we have broken below both of those, and so far have continued. So respected, right? We did consolidate a little bit just between the trend line here and the 200-day moving average. But once we broke and we continue to push. This is the day chart here. And you can see here how the 200-day moving average looks like it's starting to curve over. All right. If we zoom out, the last time that we broke through the 200-day moving average was back of January of 2022. Okay. And you can see it's a very, very similar situation. All-time highs, retested all-time highs, double top, sharp decline past the 200-day moving average, and we got a big correction in the market. Okay. Fast forward to today, all-time highs, retested all-time highs, double top, sharp decline, pushing past the 200-day moving average. And now we're talking about recession. Um, Coincidence? Maybe. Does that mean that this is exactly how it's going to play out? Absolutely not. Right? You just look back, look at history, and this is a good um, opportunity to prepare yourself for what could be a pretty decent correction in the market, which kind of aligns with a lot of things. New presidency, lots of changes happening, lots of new policy, um, lots of macroeconomic stuff going on. There's all kinds of things happening right now. So, are we due for a correction? It's not the worst thing in the world. Um, and now recession talks are back in play because of fear of rising inflation, because of the tariffs, because of all these things like a domino effect. So we could be looking at a possible uh, decent correction in the market, maybe coming back down to these lows here, right? Over time, maybe over this year, before we bounce and continue to move to the upside and make new highs and have another 2, 3 years of really good, market move. Let's move back even further and see, what we're targeting. I remember all this. This is when I first started trading. Yeah. This down leg here is when I first started trading. This is what I was learning to trade in. Um, Very difficult. Yeah, and we bottomed out right here. So we go back here. I mean, we could be looking at this support here, honestly. Maybe even this one here, 17.3-ish. Whew, that's quite a ways down there. But this happened over time. We broke the 200-day January of 2022, and then we pushed down and didn't break until January of 2023. Almost exactly a year. Almost exactly a year. So, could we be looking at a very similar situation where we're going to have a market correction over this year, 2025? Maybe a little bit of a recession. And then we come out of it in the beginning of 2026, and we have a marvelous move to the upside. So 2023, January of 2023, and it is now February of 2025. We had 2 years of a very nice move to the upside. Is that possible? Yeah. You know, does it mean that this is what's going to happen? Absolutely not. We could get really good data, and we can get some solid information that takes the fear and uncertainty out of the economy and the market over the next month, and we bounce and shoot right back up. I mean, there's all kinds of possibilities. It's not our job to try to um, guess or predict what's happening. It's our job to prepare for all of the possibilities, make plans for all of the possibilities, and execute those plans based on which one of those possibilities is actually playing out. That's it. This is not a guessing game. Make preparations and execute whichever plan decides to show up. So we pushed back up to this resistance here, and you can see we are getting some consolidation right around this resistance zone here, which is basically what happened earlier today also in previous sessions. We have 15 minutes until Jolts comes out. I would imagine today that, um, well, to be honest with you, I have no idea what's going to happen. Whether Jolt's numbers come out good, we could honestly go either way in this market, and that's the thing with such high volatility. Nobody knows, and the market will often do the opposite of what you think it might do in times like these. So it doesn't really matter which way it goes. If it moves back, if it continues to move to the upside, we'll look for entries to take longs. If it drops below again and moves to the downside, we'll look for entries to take shorts. That's it. Actually, let's go back to 2022 in this Fred chart here. 2022, January, February, January. Yeah, let's take a look at this time frame. This is a little bit different. Yeah, this article that I was reading this morning about the volatility index chart on the Federal Reserve site. Um, started in 2023, and it just points out a couple of spikes that seem to align all together. But here's the problem with a lot of these articles, and this is why you need to do your own research, okay? If you go back further, and the reason why I went back to 2022 is because that's the last time we were in the situation that we're in now, okay? You'll see that there are even higher and bigger spikes back in 2022. So the comparison doesn't really make sense. So whoever wrote this article is comparing, spikes to today's market that don't really align. Okay. If you go back to 2022 in this chart, let me actually just bring this up for you guys so you can see what I'm talking about. This one. Yeah. Okay. Beautiful. Okay. So let I guess let me bring up what the chart that the article is looking at. Okay, which starts in the beginning of 2023. Okay. Okay. Sure. So this chart here we are right now. Spike here, spike here, spike here. That's what it's comparing to. And it's telling you that you might want to think about buying because we're at these levels here. And the last time since 2023 that we were at these high levels, volatility dropped and markets moved up. But let's compare apples to apples, not apples to oranges. Okay. And let's actually zoom this chart out a little bit further to 2022 when the last time we crossed the 200-day moving average was. Okay. So let's reset this. Let's go back to January of 22. Very different picture here. So here, this article is saying, oh, maybe it's time to think about buying because we're at these levels here that kind of aligned with this point and this point, right? And here we are here. Well, hello. Look at back in 2022. Look at how high we are, these spikes here, right? Before, and this is when we had that year of decline in the market. So here we are, this article's telling you, oh, it might be time to buy stocks, but you compare apples to apples instead of apples to oranges. And this chart's telling you, you should probably wait. Okay, because we have a lot of room between here and these highs here of downside before possibly the market goes up. This is, again, just a possibility. I'm not making predictions. All I'm saying is just because you read an article and it says, oh, we're at this key level here on the VIX and it might be time to buy stocks and you should, buy into some stocks, you got to do your own research. Okay? Do your chart analysis, compare it to the charts, you know, with these articles and you'll see it's like, wow, this doesn't tell me it's time to look at buying. Right? Look at this. January of 2022 right here. Spike, this is when we got our downside until January of 2023, which is right here in this area. We had a lot of volatility, a lot of spikes, okay, in the VIX here because we had a year of pullback in the market. I mean, quite honestly, that might be the start of where we are here, but this doesn't say, oh, we should be looking to buy stocks. Got to be careful with that stuff out there. Do your own research, okay? Do your own research. Now, again, does that mean that this is what's going to happen because it happened in the past? No, absolutely not. It could be totally wrong, and it might be, 110% time to buy stocks. But I don't know that, and you don't know that, and neither does this guy that wrote the article, to be honest with you. Comparing apples to oranges. If you're going to make comparisons like that, you need to make sure the comparison is aligned on all aspects. Craziness. This is the title of the article. Spiking VIX can signal it's time to buy stocks. if you don't even read the article itself, right, which a lot of people don't, you could be looking at this and then just look at the VIX and be like, "Oh, yeah, we're really high. Maybe it is time to buy stocks." And, like, you know, not a good play. The names of these articles, man, boy, do they catch you because they caught my attention, but I read the article, and then I went and looked at the chart myself and compared the chart, the Fred chart to the actual, trading charts, and then I was like, "Wait a minute, these times don't even align. Let me compare the Fred chart to the Nasdaq chart, apples to apples." And as soon as that chart popped up from 2022 on, I was like, "Yeah, that's not a comparison." Mm-mm. Yeah. Okay. We have 6.5 minutes until Jolts comes out. Still high volatility, large candle movements, large wicks, not trading conditions for me. Mhm. Let's see what other baloney headlines are out there. Sometimes they just make me chuckle because it's like, man, the people that are writing these articles are supposed to be like the smart people, aren't they? I feel like I don't know. We've lost so much talent, and the research that used to go into writing these articles and things just isn't there because everybody wants to get it out as soon as possible, and it's like it could be really messing with people's lives if they're not paying attention to their own stuff. Again, my opinion. Maybe I'm wrong. Big pullback. Again, right before jolts. This is a thing. This is why I don't trade before big data comes out like this because this is what you get. You don't know which way we're gonna go. So we got 5 minutes, just about just under 5 minutes left until we get the data point. Again, we're looking at jolts. The expectation is 7.63 million. Prior month was 7.6 million, so we're expecting a slight move to the upside with job openings. So 7.63 million. That's what the expectation is today for jolts. So, excuse me. Um, we're actually so tomorrow's going to be interesting because we're looking. Expectations are less than previous month for CPI tomorrow. Hmm. It's gonna be interesting. As soon as this data comes out, also I'll take a screenshot of it and post it in the Discord for y'all too. Okay. All right. Just about 2.5 minutes left. 2.5 minutes. 2.5 minutes, and then maybe we'll get some direction and we can look for a trade. We're actually getting some support out of this 19.5 area here that continues to go back and forth between being support and resistance. So we're getting a lot of buying and selling in this area here. So we're range trading basically around this support slash resistance zone. All right, 2 minutes. 2 minutes. Da-da-da-da-da-da-da. Let me get my screenshot ready. Bring this up here. Stuff here. Just get jolts. Okay, so that's ready to go. I mean, if we get good jolts numbers here, either at expectations or better, we may continue to the upside here. May. We'll see. All right, 1 minute here. 1 minute. Ten seconds. Count down. 10 seconds. Already getting a push down here. Okay, so, numbers are, well, I don't see, it depends on how you look at it. Expectations 7.63 million. We got a revision to 7.5 million for the prior month, okay? Um, and the actual is 7.74 million. So more job openings. I mean, that's a good, if so you could look at the one of two ways. You can say that are there job openings because people are losing jobs, or are we creating more jobs? Right? So depending on how you want to look at this, the market seems to think that we're creating more jobs here based on this candle here, which is a good news. That's good news. That's good for the economy. Um, so, yeah, that's good data there. Let me take a quick picture. Do. Capture that. We'll come back over here. Actual was 7.74 million. Post this in the Discord. Boom. Actually, let me put it at here. Okay. Oops. Goodness gracious. There we go. All right. So there you go. Still getting some uncertainty here. And that's the thing, right? So how are we going to look at these numbers? Is it good data or bad data? I mean, it's pretty stable. If you look at the chart from previous months, we've been sitting right around the same levels here, which I would say is a good thing. That's my interpretation. Okay. Well, that's data for this week so far. So let's see how the market's going to react here. Honestly, I'd have to see. Uh, I got to see it break one or the other to pick a direction here, because all of this choppiness here in between means nothing for me. There's no direction here. There's no bias yet. My overall bias obviously is to the downside still, because that's what we're looking at. So yeah, I would honestly love to see it break the lows of the New York session here, because that would align with my bias, and then we could continue to the downside here. And honestly, we look pretty strong to the downside, but it doesn't mean that we're going to break these lows here. So let's wait and see. Yeah, let's see here. Bearish market alarms are flashing. City's latest downgrade may add fuel to the fire. Yeah. Yeah, recession chatter back in play. Oh boy, look at this, strong moves to the downside. Oh, boom. Yeah. I believe we are headed down, people. Volatility again is spiking. Oh, yeah. So I'll tell you what I would be looking for here then maybe is a retest of the lows here, and then maybe we look to go long. We go short. Phew. Yeah. All right. We close just below. Mm. Tell you what, we actually have, so break-in structure here. 1, 2, 3 candles. We do have an area of imbalance here. That would probably be the safer play. If we moved up into here and actually respected, I would like that. There's market open is here. Blew right through that. Mm, okay. Well, this doesn't work. We made new lows for the New York session. As you can see here, we're like this range is expanding, and that's when I start to see that, I don't trade. Mm-mm. Hmm. So I wonder if we're just reaching for this now resistance to retest. Actually, we just came up to this zone here. Hmm. Wicked market movement. I don't like it. Not at all. So, just a quick little update for those of you that watch my stuff and are members in the Discord. I think that I have gotten to a point where the AI agent may be ready for some testing. So, I'm going to start to slowly add some of the members of Discord um, and give them access to our AI agent. Let them do some testing, take some notes, and get back to me. I'll just read you a little snippet here. I just asked our AI agent in her chat, um, what is market sentiment today? And it gives me a beautiful summary. So equities, negative pressure, S&P 500 down 2.66%, NASDAQ 100 down 3.88%, and the Dow Jones down 2.05%. Overall sentiment, the equity markets are showing negative sentiment with declines across major indices, suggesting cautious investor sentiment. Cryptocurrency, bullish momentum, Bitcoin up 0.21%, Ethereum down 7.58%. Overall sentiment, the cryptocurrency market is showing strength with positive movements in major assets, suggesting growing investor confidence. Conclusion, equities, bearish sentiment with downward pressure, crypto's bullish sentiment indicating potential continuation. That's the response that it gave me just by asking what the market sentiment today was. Pretty good, I think. Very, very early stages, very, very basic um, AI agent. I have a lot of plans, but it took quite some time just to be able to get to this point, which is really nice. It also sends out its own news every hour. We have a separate news channel. You guys can't see any of this yet, but there's a separate news channel where it updates every hour. Um, and sends out news articles. And then we also have, um, I'm also working on having it do its own market updates every morning, but we're going to break them down into different sections. So there'll be a stock market update, there'll be a crypto market update, forex, and then we will also have an economic calendar that she's supposed to be able to um, post to every morning. That part is not working yet, but the news is working really well, and so far the chat is working really well, where you can just go into the chat. You don't have to use any slash commands or, any mention, uh, you know, commands or whatever. You just type into the chat, what is the price of? It'll give it to you. Um, or you can ask it what market sentiment is, or you can ask it to tell you about day trading, swing trading, tell you about the psychology of trading, um, all of those things. And it gives you a really nice uh, AI style answer, which is pretty cool. I think it's pretty cool. And that's built right into our Discord. She just has her own chat that will eventually be available to the members that you can just click on and you just chat in there. Again, very basic, nothing crazy yet, but eventually we're going to work to a point where you can um, have her set price alerts and you know um, reminders and all kinds of things. So lots of things to build out here, but we got a lot of good things coming to our Discord group. So if you guys are looking or interested in any of that, join now while it's free because it won't be forever. Link for the Discord's in the description. Yeah, there's just a lot of choppiness. Honestly, with CPI data coming out tomorrow, I don't know that we're going to really go in any direction here. Um, and if we do, honestly, I think we continue to the downside. So my overall bias is still to the downside. So if I were going to take any trades today, it would be shorts. Let's just take a look here. Yeah, Bitcoin is starting to roll, but we are back above 80,000 here, so that's a good thing. Let's just take a look at ETH real quick. Yeah, ETH is not doing well. ETH is still pushing to the downside here. We sitting on a pretty decent support here, though. All right. I just like to take a look at those every once in a while. Um, all right. Let's zoom out to the 15 here, see if we can get a better picture of today on the NASDAQ. It's not really showing any direction clearly. We're just consolidating, trading sideways here. And that could be today. All right, maybe we get some downside here. Me. We're just bouncing off of these levels here. Nothing clear cut yet. Oh boy. Ready for the market to dump now? Watch. This article just released. Trump raises Canadian steel and aluminum tariffs to 50% in retaliation for Ontario energy duties. Ready? Here comes the fall. Boy. The trade war is real. Oops. Oh, excuse me. I'm really moving far here. All right. Sideways trading today. What do you think? What do you think? Consolidation day? Oh boy. I don't think the market has any reason to move to the upside today, to be honest with you. So we are going to either continue to trade in this range here, or we will get a push to the downside. I do not see us moving to the upside today. Let's just see here. 15-minute. Yeah, we still look bearish. We're starting to look even more bearish on the 15-minute. I think we're actually going to push down here. Might actually be not a bad trade to take on the 15-minute here. Let's just see if we can at least get a 2-to-1 based on this. Yeah, it's close. Hmm. I'd rather zoom in and try to find something that's going to be a little bit better. Let's see what the 1 hour looks like. Yeah, we basically retested this resistance here, push down lower on the 1 hour, the 4 hour, basically the same thing. I don't know. I think we're moving down to, what are we looking at? Just under 19,000? Is 19,000 the next target? Kind of looks like that. It kind of looks like that. Comes our push to the downside. Very bearish move here. If this candle continues to push down and close as strong as it looks right now, I'd say we're definitely moving to the downside here. So we can perhaps start looking for a short position. Strong move. Strong move. Yeah. Yeah, all the news is starting to come out now about Trump raising taxes or tariffs on taxes on Canada for steel and aluminum. It's basically coming out every headline here. So, let this 15-minute candle play out here. This is very strong 15-minute candle, and it looks like it's going to close very strong. So I think we are definitely going to get a push to the downside here. So the question is what is a safe entry point or stop loss, I should say? Uh, we should respect here. Yeah, that's a strong close there. So let's see if we get a little retest here. Let's see if we can hold this retest of the bottom here. Look at this. Volatility. Market says, I don't want to. Hmm. Crazy, crazy. Hmm. Steel and aluminum stocks, U.S. stocks, um, companies are rising on this news, which makes sense, right? Okay. Most of the S&P 500 is already in correction territory as benchmark teeters near milestone. Yeah. Hmm. Let's take a look at the 15-minute here, see how this looks. We got a little retracement there. Yeah, might be still a little early to enter here. I'm not sure. Mm, that looks good. Still showing some support here. Yeah, that's holding me back here, right? The last time we came down to this price, we had a nice big push off of that. The same thing's happening again here. So there we go. Strong too. Yeah. I'd say we're at least going to lows here. Uh, yeah, which is right about, well, yeah. Now, let's see if we can catch an entry here somewhere. Oh, forgive me. Volatility is still moving up. Little area of imbalance here left behind by this candle, which broke previous structure. Might be a good place to possibly get an entry. See if we can fill at least half, just over half here. Might not give us anything, actually. Yeah. Mm. Yeah, let's see if we can get a little bit of a move back into this area of imbalance here. And let's see if we can respect the bottom here, which happens to be within the area. If we get respect there and we get a bearish sign coming out of that area, then I'd like to take a short here. But it's got to play out like that. I can't just, with this volatility, I can't just willy-nilly get into trades there. It's got to show me what I need to see. So I would like for this to close in here. It's not going to give it to me. And that's it. It is what it is. That's a lot of times that's what happens here, especially um, when we have these movements. Once you start getting momentum, it runs with the momentum, and it's all right. I definitely don't want to, get in at just some random place here. Excuse me. All right, so we're getting our pullback here, but this looks very, very strong. So, yeah, and we just disrespected that. So, uh, yeah. All right, so this does not work. We didn't leave anything else behind, right? No. We are retesting this low. And getting rejected. Now we gotta wait for the next sign to close there, though. Hmm. See, so here's an article. U.S. job openings point to softer labor market and hiring slowdown. And that's one of the ways you can definitely look at that, right? So, and I think that that's with everything else looking a little, bleh. It's easy to take the negative side of things, right? Risque. Actually, you know what we have here, though? We have an area of imbalance here that we can use as an inverse because I'm definitely not taking longs today, but I will take shorts all day long. So if we break through here, yeah, yep, yeah. All right, hold on. Be right back. Okay, we're back. I'm getting ready to short here. If we closed on the bottom, outside of the bottom end of this area of imbalance here, I'm going to use for an inverse, and hopefully we still have some more downside. But the volatility is cray-cray. I'm gonna give myself a little extra room just because if we don't close outside of this area here, then we don't take the trade. And I do want to be very cautious uh, with my stop loss because of the volatility. Yeah, we're not even actually getting the. Yeah, we might not get it. We might not have some more downside yet. Might not be ready. We peaked out. We wicked out here, which usually means we have more um, direction in that way, right? If we continue to push up and we break these highs, then this area of imbalance goes away and I won't use it because it was just taken up. It was just used. So we had our push here, and we're getting some consolidation. We still look bearish so long as we don't break these highs here. If we break these highs, then um, direction may be changing. Okay. Well, that's that. Let's get rid of this. Good thing we didn't take that trade. This is why we wait for the rules to play out. We wait for the rules to play out, and we wait for candle closes. We get a little gap there. We might actually be turning around here. Might be heading back up for the resistance here. The resistance? Oh, yeah. You could take a look at the 15-minute chart here where we had this, I'd call it an indecision candle, but we closed in the green here with this candle. So, yeah, we might actually be getting a turnaround. Or what are we looking for here? Are we looking for retest here? Retest here? Hmm. Well, we're either way, we're in no man's land here again. So, because now we pushed back up into this range area where we're like halfway there. We're in no man's land, and so we don't take any trades in there. So I think honestly, I think today's going to be a wash, everyone. I don't think that we're going to get a huge move in one direction or another. I think that the overall trend for today is going to be sideways because we have CPI and PPI data tomorrow and Thursday. So there's no reason for the market to move in a significant way, one way or another, because we have that data tomorrow. So a lot of times what happens before, CPI and PPI and those big data points is we do trade sideways, unless there's some other type of catalyst. So if we take a look at the 15-minute chart here, we're still within this range here, you know, and we're kind of just bouncing around there. So um, too risky for trades. I don't see us. Even if we did continue to the downside, I'd say the bottom would probably be at these lows here. And taking a trade, first of all, you'd have to see this turn around and break below this low here, right? In order to confirm a continuation to the downside. And once it does that, you don't have that much room between there and the lows of the day in general to get a good RR there. So uh, I think today's going to be a wash, guys. You don't have to, you don't got to trade every day. It's better to stay out when the market is, you know, messing around like it is right now. So let me see. Let me just take a quick little peek here. We do have an area of imbalance here. 1, 2, 3 candles, break in structure. We did bounce off of this little resistance area here. Strong bearish candle following. Yeah, let's just see. Let's see how this plays out. I mean, but my bias still obviously is to the downside. I don't think we have any kind of significant run to the upside today. There's no reason for the market to do that. Not to say that it can't move back up to these highs, but what I'm saying is I don't think we're making any significant change beyond that. And overall, we're still in a downtrend here. We're still in a downtrend. So my overall bias for the day and in general is bearish. So if I'm going to take a trade today, it is going to be a short. Uh, so but it's got to follow my rules. But in general, very risky, very risky. So we could possibly thinking about taking this to the downside here. That's yeah, it's risky, but I'll hang out for a couple more minutes to see if this plays out. If it doesn't play out and it respects and continues to the upside, I'm going to call it a day. No need to sit here all day watching the charts. Set some alerts, put an alert up at the top end of the range here and at the bottom end of the range. Go enjoy the day. Where I'm at, it's absolutely gorgeous outside. Got some errands to run, and I'm going to go enjoy the weather for a change. So I'll give it a couple more minutes here to see if this plays out here. Again, I'm looking for a candle to close on the outside of this area of imbalance to the downside. If we get that, then we can look to take a short. This could be your consolidation, manipulation, continuation of the move to the downside. This has to close. And then again, if it closes like way out here, then that's, this is not too bad. Let's try it. Follow the rules. We're going with the direction of the day. We're following bias. Super risky trade, high volatility. Let's give it a shot. Honestly, I'm going to take a 1-to-1 on this. I'm not going to stick in this long. If we get down back to the bottom here, I'm gonna take those winnings. I'm gonna call it a day. Just too much volatility. I'll take a 1-to-1 out of it. If I can get a 1-to-1 out of a market like this, I'm golden. I'm good. I'm happy with it. We're good to go. Pretty nice push to the downside. I'm happy with this so far. You can start to see price action getting a little bit more volatile here. Again, we're just looking for a 1-to-1. We're going to set our take profit there. If this candle closes bullish, I'm cutting it. I'm taking it. I don't like this. You can say what you want. Yeah, I didn't like the way that this closed. And with the volatility that we have here, I was in the green. Nice little $200 trade. I'm good with it. I'm cool with it. We tried it. We watched. I know what the market is capable of right now. Okay. And this is what it's capable of. Okay. So instead of allowing a trade to go bad, I recognize that this candle is a bullish candle. We bounced off of support here, just like previous structure here. We could not break below. And now we're getting this large push back to the upside. So we gave it a shot. We watched it very closely. I was only looking for a 1-to-1. It did not play out for me. And before we went into the red in this trade, I closed it. We took a little green trade, tiny, tiny green trade. No big deal. And that's it. I'm going to call it for today because we're just going to be most likely, consolidating here. If this continues to the downside, good for it. But we're just getting too much volatility. This is just way too risky in this type of market environment. And we gave it one shot. And I'm okay with saying that we tried it once. It didn't work out. We did not end red. So on that note, instead of over trading, which is an account killer, I'm just going to call it for today, everyone. And that's going to be that. So thank you so much, everyone, for watching. I appreciate you all. If you're new here, Trading Phoenix, we trade live in my challenge account every single morning that the market is open. Hit that subscribe button for me. There's like 98% of you that watch my content that have not subscribed yet. Please subscribe to the channel. Helps us out. I want to be able to continue giving you more and more content, and I will do that. But I would greatly appreciate it if you hit that subscribe button for me. Link for my free Discord is in the description down below as well. Join that as well. We are building out a fantastic trading Discord, complete with its own AI agent that specializes in finance and trading. And we are getting close to starting to roll that out member by member so that they can test it. And we'll continue to build on that. But it's going to be a great tool in the Discord. Once that reaches a certain point, Discord will no longer be free. If you're already in the Discord, it will always be free for you. So if you like, join the Discord now while it's free. Once I get all this stuff up and running and it's actually working and consistent, the Discord will no longer be free. So join now. Once you're in, anything I add to the Discord, once I change it over from that point forward, all of the members that are currently in will be grandfathered in, and everything will be free for you, including courses in the future. Once I close that off, then you're out of luck. So join the Discord, link in the description, subscribe to the channel. I appreciate you all, and I will see you all tomorrow morning. CPI data.